We begin with a story about tenure. Not the kind that guarantees you a job, but the kind that you have to earn day after day and year after year. The kind that, looking back after 15 years, may look obvious, but that at the beginning was anything but.
You know, I never really thought about, I knew I had to be here a substantial time to work with the team and drive the company what it could be, and that's great. But it never was like to do this job 5 years. I think you have, the time has to be where you have the place from where we were in a place that's great condition.
When Brian Moynihan took over as CEO of Bank of America on January 1st, 2010, the place was definitely not in great condition. It had just gone through a series of mergers, including the one that brought Moynihan to the bank through its acquisition of Fleet Boston just 6 years before.
Before Fleet Boston deal, Legacy Bank of America at that point probably had 100,000 employees. Fleet Boston had 50, 60,000. You know, then Merrill had 60,000. Let's say I had 15,000, 20,000. Countrywide had 40, 50. More people came from the outside and not. And so one of the things that the team and I had to settle down is, what is the culture we want? What are the values?
Forming a single culture from such disparate parts would have been a challenge all by itself. But this all happened as the great financial crisis was in full bloom, putting enormous pressure on all the big banks. A year into his tenure, Moynihan faced a mountain of losses from the subprime mortgage business he had inherited when his predecessor, Ken Lewis, purchased Countrywide, leading to losses of over $30 billion. Its stock price had fallen nearly 10%. Its price-to-book value was down to 0.45. And the government was putting into place fundamental changes in the banking system overall, including upping the capital requirements for the banks, requirements some doubted Bank of America could meet.
You have a lot ahead of you. You also have a lot behind you. And when we think about what the banking world was, what Bank of America was in 2008, 2009, 2010 when you took the job, it was a different world.
Well, so a lot of people don't remember that in 2007 and 2006 is actually where the financial crisis started to come through. The property value started going down, the overlending and the consumer side became exposed, the ripple effect through some of the CDOs and things like that, the impact on the Bear Stearns and Lehman and Merrill and other companies and the acquisitions that took place in 2008. What you had was non-banks that weren't governed by any rules, that were all brought in the banking system, and the net was thrown over, the tent was thrown over a lot bigger group. That's what made it different coming out the other side, because suddenly, you know, the group of my peers were Goldman Sachs, Morgan Stanley, you know, JP, Citi, ourselves, et cetera. It wasn't just the banks and then, you know, the securities firms over here or the insurance firms over here. And that then required all the rules to change fast and all the reach to change fast and stuff people hadn't thought about. You know, the Volcker Amendment and, you know, this stuff, you know, stuff that people hadn't thought about. And that was because suddenly you took all these people who were governed by different regimes, different rules, threw them in a pot and said, we're going to put a tent over all of them.
Moynihan's management team at the time knew that the challenges could make or break his new leadership. Anne Finucane served as Chief Marketing and Strategy Officer at Bank of America in 2011 before becoming the Vice Chair of the bank and Chair of its European operations.
This was a moment, if you will, in financial services. We were in a near recession that was the likes of we had never seen before, and B of A had a million problems. We had issues with regulators, we had issues with analysts, we had issues with clients and customers, elected officials were questioning our viability, and you know, the stock price was very low and there were questions about the company in general. And this is what Brian Moynihan stepped into. And he stepped into it, I have to say, eyes wide open, because he had done almost every executive job in the company. So he was prepared. I think he was prepared in a way almost no one else could have been. And he was also willing, and he was certainly able. So this was a moment for this company, and he assembled a crew around him, an executive management team, and we were going to work 24/7 for what turned out to be at least a few years, and we recovered.
To bring his bank back from the brink, Moynihan focused on what was working, where it could win, and what it could do without, cutting billions in expenses and tens of thousands of jobs.
We got rid of $300 billion of assets, 50 operating businesses, We were down to operating efficient, made sense, and we said, now we got to grow. And so the first part of responsible growth is grow, no excuses. But what you had in the base of that was these 8 lines of business we talk about. You have Jack Welch or somebody say, you got to be top 1, 2, 3 in the business. We were top 1, 2, 3 in all the businesses across the 8 lines of business. But what we had is a lot of other stuff that was not as interesting, and then we had the regulatory issues, and then we had the mortgage issues. So we had to just push all that away. But all those acquisitions left us with a franchise that is a top consumer banking franchise, the top wealth management franchise, the top commercial banker in the United States, a global large corporate banker, and a global markets business that we were able then to start to invest in growing them organically.
We had to decide what we were going to do in terms of everything from customer care, if you will, employee morale, dealing with elected officials, dealing with regulators, and then what businesses we were going to lean in on and those that we were going to perhaps exit. So Brian is got a bit of the engineer in him in that he is an exacting person. We laid out every line of business. We laid out every geography we were in. When you look back on it, you can be a bit nostalgic, but at the moment, it was very difficult. And he was so determined. He's a very good leader because he's calm and he's thorough, and he's also human. And what I mean by that is he got when everybody was kind of frazzled, and we just kept at it. But there was a camaraderie around it that I think would be maybe unexpected.
Even as Moynihan and his team were rebuilding Bank of America from the ground up, concerns about the bank led others to make sure its problems didn't further risk the entire financial system, leading the government to insist Bank of America and the other money center banks take large infusions of cash investments, and even for mega investor Warren Buffett to pitch in with a $5 billion investment.
So in 2011, August, when the United States had been downgraded, was close to defaulting. At that point, the U.S. was short and didn't have enough money and was starting to run out of money. We were also getting knocked around at the same time. And he came in August and said, here's $5 billion. I know you don't need it, but it'll stabilize. And the 250,000 plus people we had at that time came to work the next day and said the smartest investor put $5 billion on a company in 24 hours.
That was an interesting moment. At that point, we had actually recovered enough that we had sufficient capital. And by the way, he knew that. And in fact, that's what he said to Brian. I know it, that's why I'm investing. It helped us enormously with the analyst community and elected officials and even our own employees. If Warren Buffett was investing in us, it was such a boost of confidence that we didn't maybe otherwise have at the point. So it was reputationally really beneficial.
Under Moynihan, Bank of America has not only survived, it has thrived, earning over $15 billion a year over each of the last 10 years, increasing its assets from $2.3 to $3.3 trillion, and its share price from $13 to $44. And that price-to-book ratio? It's gone from 0.45 to over 1.25. But even as it has come back strong, it has not grown as fast as its biggest rival, JP Morgan, whose share price has led the pack of the big banks, while Bank of America remains somewhere in the middle. Some have suggested that Moynihan's steadfast commitment to responsible growth may have held it back.
Did you leave any money on the table because of the responsible part? And does responsible growth look the same today in 2025 as it did in 2010?
So one of the things we always talk to our teammates about is responsible growth was a call to growth, not a call to be responsible. We were already pretty responsible, think from 10 to 15. And the idea was we'd done all the work, we reshaped the company, we said, now we got to grow. And so that you never disrupt the company's ability to keep going. And we have businesses which offset each other. So the markets business has done well, and the interest rate environment changed. Now the consumer and global banking business will kick in. But the idea of responsible growth is that you got to grow, no excuses. You got to win in the marketplace.
Responsible growth is like a dual thought, if you will. Demonstrating responsibility, which is sort of an extension of good governance, and also the contract you make with your clients and your employees, that you're going to be responsible to them first and foremost all along the way. And remember now where we came from. And then the second thing was that we would grow. So responsible growth can be a modifier to growth, but it's actually two thoughts. We will be responsible in all the ways that clients and regulators and the community would want you to be, and we will grow. Maybe more conservatively than others, but I just repeat again, B of A has had 10 years of 15 billion plus net income consistently.
Where is Bank of America today? Give us a sense of how you grade yourself.
Well, we have great potential, but there's a phrase that Jim Collins, a great business writer, uses, and what I say. So I got a lot of people asking me, I just had our market presidents on and talk, what about 15 years? What are you proud of? What do you do? I said, it's a nice start. What this company has ahead of us is a lot because of what we've done for the last 200 years, but what we've done in the last 15 years as a team.
As you look forward to the next 15 years, what do you think that may hold for Bank of America? And what kind of person would need to lead it going forward as opposed to what's led in the past?
I think if you look ahead, the changes will come from the data, the technology, the ability to transmit that data, the compute power, the ability to imitate a human's thinking. Those are ahead of us. That implication of voice recognition, computational power, algorithmic analysis, mathematical analysis, combined with an understanding how humans can drive it, makes the next 15 years a whole nother sea change in how we operate. And the person that will be operating that has to be that wise and that current, that balanced and that aggressive. And that's the key, which is how do you push?
As Moynihan positions Bank of America for the next 15 years, one of his priorities is to ensure that it is both a global bank and a local one, that it is thoroughly integrated into the communities it serves.
The whole idea was that we would set up a situation where you'd have top-line executives, but you'd also have market presidents. And the idea behind that was that market president would have a beat on that community, that economy, how we were going to contribute to it, and by the way, how we were going to get our fair share of business from that community. So he's been very focused, and he takes it all the way down to the community level to make sure that not only is the reputation good, but the numbers are good.
And that's where we turn next on Wall Street Week, to one of those communities Moynihan works to serve, and a market president who illustrates what responsible growth means in practice.
During his 15 years at the helm of Bank of America, Brian Moynihan has nurtured an alternative structure within the bank, one focused not just on its 8 lines of business around the globe, but also on the individual communities it serves across the United States. That alternative structure is built around 97 regional presidents who add to their regular banking jobs specific local responsibilities.
It's all about serving the client. And when you think about Brian's tenure and his 15 years, he worked hard to build the culture of Bank of America. He wanted to simplify this organization. He helped us focus and have everything center around the financial lives of our clients. So it sounds like common sense, but when you're an institution of our size with 8 lines of business, that takes a lot of coordination, and it takes that local understanding of the communities.
Jennifer Chandler is the Dallas market president, charged with focusing on her region in addition to her job as head of B of A's philanthropic solutions team.
One of the things that we started, this is like 30 years ago, we started thinking about this question, which is if we bought companies and pulled the corporate headquarters out of town, we pulled out the senior leadership too, because the company became a subsidiary and a part of a whole. And that became acute in the 80s when the acquisition started building up into the 90s. And so after that, we said, how do we think about having our cake and eat it? How can we have these national businesses, which are run nationally, not locally in the disparate parts, but run nationally, wealth management business and a consumer banking business and a middle market business. How do we knit them together? And so we started this idea of building the same kind of cooperation in the markets with a leader, a market president, who would replicate me in that market and replicate what used to be.
They've had market president for my full tenure here, as long as I can remember, at least in the 25 years. But I have seen it really improve under the leadership of Brian Moynihan. And as you know, he celebrated his 15-year anniversary as our CEO. So early on in my career, it was more around the giving in the community, a check presentation, maybe some volunteerism. But under his leadership, it was far more about delivering this exceptional experience to our clients, to take this massive institution, to make it feel more local. He was very thoughtful in that around who we had in those positions. It's quite the honor.
The regional president system is B of A's way to have the best of both worlds. All the capacity of a big money center bank together with the local connections of a regional bank.
How do you compete with regional banks? Because often regional banks would say that's exactly what they do. They're located there, they know, they have all those client relations, personal relations with the society, with the culture. How do you compete with that?
So the way we think about it is we got out local to locals and out national to national. So our team in the local market has the authorities to do things, credits up to $30, $40 billion, all approved locally, no other approvers, even higher than that in some cases. So the idea that's competitive locally. So we think about what the power of that team has that's managing locally, the personnel they have, and then how they work together. And that's where in the market president, through the 97 teammates we have that do this, they have scorecards to make sure the business is moving. Those line up with our line of business scorecards. And so the idea is to give them authority and power, and then advertising and charity money, all that they replicate the president of a bank. And that's what they do.
You mentioned 97. How do you pick 97? Why isn't it 80 or 120? How do you pick where you need a regional president?
Oh, we put it wherever we have a business. So we actually are in probably another 30 or 40 markets that are small, that aren't as distinct. So we look at the MSAs, and we said our goal in the company is to cover the entire population. By historical accident, for example, we didn't have anybody in Ohio, so we'd now built out Cleveland, Columbus, and Cincinnati, Dayton a little bit. We didn't have Louisville, Kentucky, just because there was never a bank required. So we're building out all these places, but it's all MSAs.
As Dallas market president, Chandler competes against regional banks, but she also works with them.
They all play an important role, and I love our regional banks. I'm dear friends with many of the CEOs around town, and it takes all of us, and I think they would tell you that. It starts with understanding our clients. That is very localized, everything we do. So while we have 14,000 teammates and a very large presence here, every week I'm in a financial center, whether it's in the center of downtown or it's in a suburb, and I'm there as the doors open. And I will tell you, the person that our clients are walking in to see are people from the community there. So when you think about regional banks knowing their communities, when I can tell you I had a receptionist that just celebrated 57 years, I think that would reassure you that those clients know exactly who they're going to walk in and see. And those stories are not small. Our folks stay here, and whether it's fiduciary planning on the private wealth side, we helped write the fiduciary documents with the estate planner. I wouldn't say one absolutely has that secured better than another. We think the regionals are very important for a lot of reasons, but I firmly believe with the approach we take and the approach at Bank of America, we understand our communities and we have very strong relationships with the clients we serve.
Dallas became a financial hub in the 1930s after the discovery of oil in East Texas, and went on to become a manufacturing center during World War II. With the tech boom of the 1990s, it has become part of what some people call the Silicon Prairie, supporting a diverse group of industries, including financial services. Schwab announced that it was moving to Dallas from San Francisco in 2019. All of this has meant steady growth for the Dallas area, with a current population of nearly 8.5 million people, up from around 5 million in 2010 when Moynihan became CEO.
It is an exciting time, and I'm third generation Dallasite, and so I've seen just the history of this community. And we've always been a can-do city when you think about what we've done, and we were very forward-thinking many years ago, whether it was the railroad, DFW airport. So we continue to think for the future and see what the needs of the community are. Why I raise that is that's what's worked to bring this diverse economy to North Texas. So examples include technology. Well, Texas Instruments was here many years ago. So when we think about technology, that was for us the 60s, the 70s. So always being forward thinking. Now that looks like biotech. Many people don't think of Dallas necessarily as a technology hub. They think of some other city here in Texas. Well, that's Dallas, and we're attracting the talent from the East Coast, from the West Coast. They're coming here. So it's diversity in every industry. Technology is a large one. We also see a large presence of global companies who either bring their headquarters here or they want to buy shore, maybe have population here or overseas. And I attribute that to, again, the great climate we have. We're centrally located. We're favorable when it relates to taxes. And it runs the gamut, manufacturing. One that you may or may not think of is the sports industry. We are #1 when it relates to sports, and it's not just the usual suspects. We, of course, are the official bank of the Dallas Cowboys.
How do you know that it's working? Or maybe more important, how do you know when it's not working?
We keep track of all the things that happen. There's metrics for every market, and we go through them constantly, and they've been building on, building on, and building on. But how I really know it works is when I go into market and watch that team tell me about what they've been doing together, whether it's on the volunteer side, whether it's on the business referral side. And so they are always telling me that. And I don't rely on just what our statistics say. I rely on them also feeling good about it. And what can we do? So when a natural disaster comes up, Western North Carolina, the market president there, the Augusta, Georgia, the Florida, they also are the people who help us deploy in those markets. And sometimes it's the people working branches and commercial bank. Sometimes it's big operations center. So, and they basically lead our efforts in our forum to help bring those employees. And so what you see is the success around all that. It's not just business referrals and that stuff. It actually gets into them leading the market and also helping us do what we do. So when the horrible floods came in Western North Carolina, we found every teammate. We brought our Star Lake branch up. We brought our ATMs up. We brought food in and water. We brought water to the house. But we're working through that market presence, say, what do you need? And then in Augusta, Georgia, the same thing with Oro Parish, or down in Florida with the various markets. What do you need? And what are you hearing? How do we connect through you so that we can not only have these national relief teams that are tremendous, that are monitoring this and doing, but they do it through the eyes of the local and how we can help them.
Chandler credits CEO Moynihan's leadership with avoiding the recent upheaval in regional banking in the wake of Silicon Valley Bank's collapse.
If we think about commercial real estate and we think about that example, it goes back to if we had not had responsible growth, not 6 months before, not a year before, if we hadn't driven that for a decade before, would we have had far more challenges? Absolutely. But it wasn't only the commercial book, and if you look at our balance sheet, we're responsible in our lending and we had smaller exposure. It was on the deposit side of the balance sheet. If you look at the regionals and some of the others that had challenges, we weren't concentrated on the deposit side either. So it goes to client selection, making thoughtful decisions. But I'll tell you, in hindsight, thinking back a few years before, were there a few deals and opportunities we may have looked at that wanted to do at the time that looked attractive? Of course there were. But how did we feel going through that experience when we could not only insure our clients, but we were able to step up and help some of those other institutions that needed us at that time?
So it takes some care and feeding that is important. I talked to the team. I just talked to them today. I talk to them every month to make sure they give me any input of what we can do. And then we advertise locally and we use their presence locally so their names appear in all the press, and so that when somebody says, I got a problem with Bank of America, I got an opportunity for Bank of America, they know who to go to.
As Brian Moynihan looks forward to the next chapter for Bank of America, he emphasizes the history of the bank, its tradition of connections to the communities it serves, and above all, its connection to its clients and customers, driven by a team that's learned to pull together.
Great businesses that have a common purpose to be great for the clients of those businesses, each other, the shareholders, and the communities they serve, and doing it in a way that, frankly, we're very proud of. Our customer delight scores are as high as they've ever been. Our teammate scores, our attrition's down. That's all good stuff, but it comes down to serving those customer and clients every day. And all that's worked to where we have driven this company, from here to some place that's kind of fun. And the next generation after I'm gone will take it and drive it even further.